Hey everyone, welcome. It is Thursday, April 18th, half an hour before the market is going to open. We've been having a mostly downward moving week where we open high and then we end low. So every time we've seen that this week, we've been commenting how if we open high, it's not necessarily good news. But now we're starting to anticipate a bounce. We are very close to the MA90 on all of our major indices, and we're anticipating that we may come and touch that MA90 and then bounce. Let's see how we're opening up this morning, see if we're following that same pattern that we have been, and what that might mean if we are or we are not. Let's go and take a look at our futures and see where we're opening up. 9 on the S&P, so that's about 20 basis points, not too significant. So nothing super significant. So we're right around a random levels. We are up, but a random amount. Now there's been a couple days this week where we were up significantly and we still ended up down. If we're up just a random amount, then it is still kind of looking kind of likely that it's still possible to move down even lower, in which case, as long as we don't do it super aggressively, it looks like we could just touch that MA90 and that would still be normal movement. If we break very powerfully below the MA90, excuse me, that would be a surprise and an abnormal movement. Right now, our high likelihood event is to come down, maybe touch that MA90, maybe bounce from this horizontal support that we're at right now and start to move upwards. But we're not showing a very strong bias this morning. So at least there's that good news. The things that we want to watch very carefully today are the bonds and the VIX. That will help us decide what's going to happen. So you can see here that we're up a tiny bit on our indices, but we're mostly flat. What that might mean is we could trade down a little bit towards the previous day close, and then we'll see if we start bouncing. Let's add in a couple extra lines here, just so we know what we're looking for. So oops, get those to be the same color as all the rest of our lines. And then over here. So as long as we hold these levels, the 499 level will be okay. Let's see where that is in relation to our MA90, 495.25. So let's take a look at 495.25. I'm having trouble getting my mouse there, so we'll just leave it at the 495. And that's a reasonable level. If we come down, the distance between these levels are about the same. We could come down, hit that 499. We could come down as low as the 495. If we break that 495, then we'll want to watch the market very carefully. Let's just pop in our TLT and our VIX in here as well. That's something that we'll want to watch throughout the day if we are day trading, or at the end of the day if we're swing trading. We'll want to watch these levels very carefully and see what happens. If we look at the TLT as of right now, it looks like it's going sideways, down a tiny bit from yesterday. As long as we resume this movement upwards, then that'll take pressure off of these stocks and we'll get that opportunity to bounce, that like we were talking about in our major stock indices. If we look at the VIX is coming down. So there is not fear building up in this market. We peaked out, at least for now. Looks like we peaked out. And if this can continue to drop, then that should give us space for that bounce that we're looking for. What has not happened, even though the S&P, so VIX is specific to the S&P went down yesterday. SPY was down 0.59%. We had a reasonably large bar yesterday down into the 500 level. And even though we were down, the VIX did not increase. It actually ended up lower than the previous day. And the high did not reach the highs of the previous 2 days or even 3 days. So VIX is coming down, it's calming down. So that's giving us space to breathe. And yesterday, when we looked at the aftermarket, we said, okay, now we can bounce up maybe to that MA50 level, which might be the same as the EMA20 level by the time this happens. We could pause at the EMA8 if the market's a little bit weaker, and then that would be a high probability place for us to start to move back downwards. Right now, we're still looking at the 10% correction scenario. That is still the more likely event because nothing really changed overnight. We can take a look at our economic reports. Today, nothing really significant happening. We've got manufacturing index, a couple of Fed speakers speaking, but really nothing that is really going to move these markets. That means in the absence of geopolitical news, we are going to be more focused on earnings. If we look at today after the market close, we've got, let's see, Intuitive Surgical, a little bit if we're looking at robotics and AI, then, but this one specifically in the healthcare space, but it will have a little bit of an impact on robotics. And Netflix. Netflix is our big FANG stock that is happening tomorrow or today after market. It'll affect tomorrow's session. So anytime we have a large FANG stock or a really huge market cap stock, the session before has a tendency to either be muted or biased towards the upside. The reason is because institutions don't want to short the FANG stock right before earnings. They're not going to gamble like that. And so they'll want to wait and see what their earnings are before they make any decision about adding more money or removing money from that particular stock. What that means is muted trading in Netflix, which is a large cap stock, which is going to have heavy influence on the index. And if I have muted trading in a large cap stock, then the overall index will be affected. It's going to be more muted as well. And to the downside, since we're going to be really reluctant to short, because when we short, we have unlimited risk. If I go long, I have limited risk. So we're more likely to potentially add to shares right before earnings than we are to short right before earnings. And that's why the session immediately before a large FANG stock tends to be more quiet or biased to the upside. The fact that we have Netflix here reporting between now and the next session is going to probably help us make that little bounce, or at least it's going to mitigate how much we might drop today in the market. Let's see if there's any other big names happening tomorrow before market. Okay. American Express, Fifth Third Bank. So we have financials still coming up. Then we have some smaller regional banks also. Procter & Gamble, that's going to be important in the consumer staples space. We'll see how hard the staples are being hit, but in terms of their earnings. So is inflation affecting even consumer staples? Are people moving away from name brands, consumer staples, or are they still buying the name brands? Procter & Gamble is a major manufacturer or owner of very well-known household brands. We also have Schlumberger, which is a big player in the energy space. So we have some pretty big names that we haven't really picked up in terms of the earnings season. That's probably going to happen next week. We can take a quick look at that. But once we start getting a whole bunch of FANG stocks up here, or larger second tier stocks, the Alliance Bancorp, next week. There's too many. There's 27 pages of this, so 420 stocks. I guess it would be US. But in any case, it looks like earnings is really going to start rolling next week. So for today, Netflix will probably help us stay muted and quiet and not fall too much in the market, or it might even help prop up the market so that it might get this chance to bounce today. That's really what we're going to look forward to, is does this market hold? Does it bounce? The last few days, we've drawn our line in the sand and it's crossed it every time. So we definitely, except for this one day where it's very flat. But so far, there has been a negative bias in the market. We are reaching appropriate levels for a bounce or for a pause. We are at the very close to the 5% pullback level, and that will most likely serve as a good support where we can bounce from and then continue down towards our 10% correction. So other than that, doesn't look like we have a lot to pay attention to. We can take a look at this FedWatch tool and see where we are in terms of June. If that changed overnight, nope, not really. And then the other thing is the CNN Fear and Greed Index. It'll be interesting to see where we're going. And we're in fear. So in just a couple days, we swung down from greed all the way down to fear. We pretty much skipped the neutral phase. And there is fear inside of this market. I don't think there is as much fear as this index is indicating, because our VIX is down. Our VIX is down. We did get that spike up, but it's on its way down. So it's looking like that fear index is lagging. And I would focus way more on the VIX and probably just ignore the fear and greed index for now. That takes into account a lot of things. If you scroll down, it tells you the things that it takes into, like more momentum, volatility, things like this. So it'll move more slowly. VIX is going to give you much quicker, up to date what's happening in the moment, what market makers are thinking immediately. So we would want to focus on VIX for sure today, see how everything goes. If we come down and we touch this 495 level, but VIX is not spiking, or if we come down and we're still in these kind of 18 or 18.5 region, so not nearly as high as these highs that we had before in the previous day, at which were not nearly as high as the previous day. As long as we stay within this spike right here from yesterday, we're not going to be concerned about a market meltdown or breaking that MA90 or just going straight down to the 10% correction. So we have a good idea of what to expect in this upcoming session. There's a little bit less to look at today, simply because we are anticipating a little bit more of a quiet session today with the possibility of some recovery. So that means that we'll get an opportunity to exit any longs that we might have in our portfolio that we don't wish to have. Instead of just liquidating them right away, we have the space to wait for a market bounce before we get out, so we can get out at a more favorable position. And then it could be appropriate then to either look for shorts or start hedging against the market in case we get a quick pullback down and get that 10% correction. Okay. That's about it for today. We'll end it there and allow everyone to prepare for the market open. I will be available this afternoon, so I will be here for the post-market session. Have a wonderful rest of your day, and I'll see you after the markets.